Welcome to another video by the Trader Guy at thetraderguy.com. Looking at the currency markets after the Jackson Hole speech, we currently have ourselves a couple different interesting situations playing out. I'm actually recording this on the 27th of August, so this would be one day after Bernanke's Jackson Hole speech. And the currency markets obviously are closed, or at least for most providers. And as you can see in front of you is the Euro USD weekly chart. Now, the reason that I chose this chart was that it it's very common for traders to when they start talking about the dollar, for example, or the euro, they tend to match them against each other. It is by far the most liquid pair out there, so of course it's one of the more important ones. Now, this has been an interesting situation in this pair because I've actually had a lot of different scenarios play out in this. At one point in time, I was kind of looking at a flag, and in theory, you could still hold it up. It's not as pretty, and you could say that we pierced it last week. This is the weekly chart again, and then closed it this previous week, or went above it this previous week. A little bit of imagination is needed, but it should be noted that measuring this to this, the pole, if we get a breakout, which it appears that we are going to, then the target's really 165, which is an all-time high. Um, Looking at this pair, there's a couple other things that you would notice right away. You would notice that this weekly hammer seemed to be a bottom, and you'll notice that the lows are getting higher progressively. So it does seem to me, even though I don't necessarily agree with it, that there is a lot of pressure building on the euro and they just want to break it out against the dollar. It should be noted that Bernanke did say some things about that they still have some options, which kind of leads some people to believe that perhaps the Fed will find a way to ease yet again. But when you look at this chart, uh, it has been a mess, and this is a good indication of what the forex markets have been like in general. For a while I had I said, well, forget about the flag, it's just a downtrend channel. Well, now I'm starting to see a couple things play out that makes me think that maybe the flag isn't such a ridiculous kind of setup after all. When you look at this, you see, we had a shooting star here. It's a little bit more of a doji, but it served as shooting star, and then a shooting star here. Notice that we had two hammerish bars, candles, I should say, and now we're approaching the top of this shooting star. And one of the what I find one of the most effective signals, a lot of shooting stars and hammers are very effective, especially if they're placed at the right spot. But what I find particularly accurate is when these things fail, because they don't fail quite so often, and when they do, you have to think about what that represents. Let's take a look at the last, say, 5, 6, 7 weeks in the euro. Well, let's watch what happens. I'll draw this out, and excuse my rudimentary artistic skills here. But you basically had the euro was drifting lower, and then we made this quick, sharp advance, and it was rejected, and that would have been the hammer. And you look at this, and we rose again, and we came up here, and this was rejected, and then we fell, and that was rejected. We fell, and that was rejected. We rose, that was rejected, and now we find ourselves right at the top. Very, very, very messy trading circumstances, but it has to give one way or the other. I mean, quite frankly, it can't just sit here forever. So it appears to me that we probably will go higher. Of course, I can only react. I can't anticipate because you go along here, you may find that 145.20 or whatever the top of this is the wall of death, and you're 300 pips down. But I find it very interesting that that's what we're seeing in the euro right now, and it does look bullish. I mean, I don't believe in it, but when you take out all of the noise here, this is essentially a rounding pattern. I mean, we've dipped and now we started to rise, so it does look to me like there is some potential for some upside here. And you got to think that if we break this weekly candle here, the shooting star, we're probably going to aim for about 150 or so right away. And that's not a real stretch. It's only 500 pips. So it just depends on what we get uh, for this. I know that there's a lot of risk in Europe. I trust me, I know, and I don't like owning the euro, but the chart is telling me that a couple dozen pips above here, I may actually want to own it. Of course, on a breakout like this, I like to see a daily close above 145, or at least uh, perhaps a pullback, and then maybe a hammer on the 4 hour or something like that, and then a move up. But it definitely looks like the euro wants to move upwards. Looking at the Aussie, it's a very similar situation. I mean, we had this absolute meltdown this week that was stopped at parity, and notice how the previous week we had the shooting star, and I thought, well, okay, maybe we're going to hang out between 100 parity, sorry, and 105. And this previous week we have gone up and tested it, and that really it stopped at 106. So when you zoom in at the daily level for the Aussie, you can see that perhaps it is more like a 100 pip zone here. You can see that there's some things going on right at 106 as well as for support and resistance. So if you think of this as a 100 pip line, thick line, that gives you a little more accurate description. We get above 106 and we can hang above there for the day, for the daily close, or perhaps break above and find support. It looks like the Aussie wants to go up too. And you have to keep in mind that it is an uptrend, so this isn't a real stretch. We get above 106, it looks like 110 is probably the next stop, really. One at 108 will cause some type of reaction, I'm sure, but 110 is the next major area. And going back to the euro US dollar pair, I mean, a breakout from here, even though there's a lot of reasons to not want to own the euro right now, it's with the trend that we've been in, um, for well over a year now, really. So, um, not a real stretch on that part either. When you look at the Kiwi, it's the same story. We had this um, pretty vicious bar here, candle here, where we broke to 80, and you can see that we've kind of pinged around, and it looks like we're going to try to break the top of that uh, hammer and make a run. Now, for my money, I want to see it close above 85, not 84. And when you zoom in on this, it does look a little bit like a 100 pip thick area as well. You can basically just say that is your line. So the antipodes, the Kiwi and the Aussie, tend to move very similar. So this makes sense. This is essentially the Aussie chart. You can replace um, 80. You can just make that parity, and you can replace 84 and 85 with 105 and 106, and you have the Australian dollar chart. So none of this is a big surprise. So what does this tell us? What does this tell us in general? I think what it tells me is that the world expects more quantitative easing. Even though he didn't really say it, the one thing that he did mention in his speech was that the next Fed meeting was going to have 2 days instead of one. So it appears that they are willing to seriously consider doing something else. This all tells me a couple different things. This tells me that the world won't want to own dollars, because if they're really willing to buy the euro, and you want to talk about a currency that is in an area that has uh, severe chances of bad bad juju going on, it's the euro. But when you look at the antipodes, they are current or commodity currencies. So what's going to happen is if they go into the quantitative easing mode again, that a lot of times will put a bid under oil and grains and gold and everything else. And these commodity currencies looking like they want to bust out shows me that the market is starting to think that way. Again, we have our levels and we have to see them broken. In the euro US dollar, we want to see a clear break of the 145 level. And in the Australian dollar, you want the 105 to 106 100 pip thick zone broken, and in the Kiwi dollar, you want the 84 to 85 zone broken. But all of these moves would be with the overall trend. I mean, one of the things that people find hard to believe is, it keeps going down and it keeps going down. But look at how many times, this is the Euro Swiss, look at how many times, like this right here, we had a nice hammer. I'm going to willing to about say it was at some, 145, and it did bounce. It bounced 1,000 pips. But when you look at the entirety of the move, even this latest move here really isn't that much. So this just shows you have to keep an eye on the bigger trend. And these moves, as much as I don't necessarily agree with them, are in line with that bigger trend. The trend goes on much longer than you anticipated to. And that's why the more I trade, the more often I just go with the trend, because quite frankly, there's been trends over the last several years, the euro dollar to the upside for the last several years, except for that little bit of a meltdown in the 08, 07, 08, 09 area. But there was 3 or 4 years before that where all you had to do was buy it every time it dipped. Gold, the only thing you've had to do is buy it in the last 10 years. Yes, you get whip saws and you get nasty, wicked pullbacks, but if you keep your position small enough, you really could have just bought gold whenever, or the euro whenever, or the Aussie whenever. So when you see these types of moves, even though they go, even though they contradict a lot of the things you may think, the truth is they're with the trend, and they have a lot of market participants behind them. So it is what it is. We'll see. It'll be an interesting week coming up. This week coming up should be, I think it ends the September 3rd or so. This should be like the last week of summer per se, and the week after that will be, or this week or that week, somewhere in this time period, will be when the liquidity starts back up in the marketplace. So we'll see. Like for example, with the euro US dollar, we may see just a massive. It just might blow right through 145 when everybody gets back. If that's the case, then that's probably the real move for the next several months, if not the year. It may fail as well, and if it does, then so be it. But keep your eyes on the charts. These are some things that I've been paying attention to, and as you can see, we may be getting some real moves here fairly soon. Thanks, guys.